Mindset is critical. Mindset is key. And what is that? What is that? That I am a BYOB master trader. I am the signal. All my trades in profit. I am 777. All right. Now, yes, tonight is a training call. That's what tonight is. Tonight is a training call. Tonight, we are definitely going to cover a few things that we've been discussing as I promised you all. Okay. As I promised you all. But yes, keep dropping it in the chat. Once again, this is Tasha M. Dyer, the Trade Whisperer, creator of the BYOB Cash Out Strategy. And so as we get started here this evening, as we get started here tonight, yes, keep dropping it in the chat. Let me know where you're calling in from. All right, I see you, Jacksonville, Alaska, Grenada. Keep dropping it in the chat. This is BYOB worldwide. And we have to have that right mindset. All right, ladies and gentlemen, we have to have that right mindset. So now I'm gonna go ahead and share my screen. Okay, I'm gonna go ahead and share my screen. But as I do that, if this is your first time on the call with us this evening, let me get a 111 in the chat. Your first time here with us this evening, let me get a 111. And if you're still learning how to cash out, let me get a 222. Let me get a 222. So let me get that. All right, there we go. So welcome back. Now, for those of you all, this is your first time on the call with us this evening, let me explain to you how this goes. Let me explain to you what it is that we do. On these evening calls, what we do is we educate, we train 1 million families financially educated and impacted. That is what this is all about. It's about you becoming the signal. It's about putting you in a position of power. It's about putting you in that position to be educated for your complete success. In the morning calls, we navigate the markets. In the morning calls, we help you we help you take what you've learned and put it into practice and actually navigate those markets. That is what we're doing consistently. Now, you all had some tremendous success. You had some tremendous success. But there are a few things I definitely want to share with you. Now, there are a few things I want to kind of go over with you this evening. And this is all for a reason, right? There's a few things that I want to talk to you about this evening. And as I stated, it's all for a reason. And the reason I want to have this conversation with you is because we've been having a conversation on quite a few things, okay? We've had a conversation on a few things that actually, just really put you in a perspective of your mindset to trade. Now, why do we start going over those affirmations? We've talked about the different type of markets that we've had. We've talked about the fact that Bitcoin, has been in euphoria, and Bitcoin has definitely been, something where we've been, literally just kind of pushed this and taking this to the next level. And you guys definitely took a nice ride on that cryptocurrency, on Bitcoin. We talked about the type of markets that we've had and how to analyze them. And so I definitely want to highlight a few of those things to really help you understand the market. We've talked about just this morning and this past week or two, how we're about to start taking this and we're about to start really helping you understand the market structure and implementing the tools. And so tonight, I think it's very imperative and important that we understand how the market works from the big picture. And then we can just kind of scale it back down. We want to understand how it works, big picture, and then we'll scale it back down. So what we're looking at right here is actually the psychology of the market. Now, the market is, I'm telling you what's going to happen. I'm telling you what it's going to do. And I think this is really important with what we're looking at right now. We just had a conversation about cryptocurrency. We just had a conversation about, basically the cryptocurrency and how that works. So I just want to break this down and I want to show it to you in the market. And also when I get asked a lot of questions about, fundamentals and the technicals and where is this going, where is that go. So for those of you who are just joining us for the first time, this is your first time with us, I definitely want you all to understand that, yes, this is definitely something that you're going to grasp. We're going to walk you through the strategy before the call is over. We're definitely going to do that. but I also want to make sure that you are in that position. I want to make sure that you are definitely in that position where, you know, where you are definitely putting yourself in that winning position. And yes, 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 Bitcoin. So stay tuned, stay tuned, stay tuned. I see a lot of you all trading Bitcoin for the first time. So yes, stay tuned, stay tuned, stay tuned. So what I want to help you understand is this is the market. This is the psychology of the market. Okay. This is just it. This is what the market does. And so we always talk about as you're trading, and we always talk about as a trader, you know, we definitely want you to think about it from a perspective, and we want you to be in a mindset of non-emotional. We always talk to you about checking your emotions. Okay. Why is it important that I check my emotions? I need to check my emotions. I have to check my emotions because the individuals trading, the individuals participating in the market are actually emotional. And so this is why we definitely want to make sure that we're not emotional. So when we make the statement, or you see me make the post, or you see me on this call making the comments that 95% of individuals are emotional, and then you think about the fact that 5% control 95% of the wealth. 95% are fighting for 5% of the wealth, and 95% of people are emotional. This chart should definitely explain that. This chart definitely breaks this down, okay? That's what this chart does. And it's a psychology. That's why it's called the psychology of the market. So when you're looking at the psychology of the market, it starts here. All right, we're going to start with disbelief. And this is a cycle, and this cycle is consistent, and this cycle is continually moving. So I have my disbelief, I have my hope. Now you see it's rising, okay? See it's rising. And I want you to kind of think about what's happening right now. So since it's already out of the bag and somebody's already commented on it and somebody's already sent me a message about Bitcoin, let's just think about that for a minute. Let's put Bitcoin on this chart because I actually have that to talk to you all about this evening. So as we're thinking about this, I just want you to think about the cycles and what the market does. So as it's rising, you know, let's think about it. You think, can I get in this trade? Can I take this trade? Is this a good trade to take? Is this something I can do right now? Is this? Think about all the questions you ask. Think about the emotions you go through. Think about the questions, the thought process, all the things that we tell you you have to check. Even when you read the book, Be Your Own Bank, Hidden in Plain Sight, I want you to think about why mindset is so important. Why do we start this call off with affirmations? Why is it so important to you to be in the right mindset when you sit down to take a trade? Because this is what's happening. This is the reality. This is what's going on. This is what people are thinking. And I just really want you to think about that for a minute. This is really what people are thinking about. So you have the optimism. Is this real? Can I take the trade? Did it cross the support line? Did it cross the resistance line? Did this happen? What's going on in the market? And then we have the belief. Okay, we have the belief. That belief, you know, is it's time for me to do this. Okay, I have the belief. And then of course, we have the thrill. So now everyone wants to get into the trade because it's been rising. You stop second guessing yourself. You stop doing all. Now think about it. Since we're talking about Bitcoin, since that was brought up, you know, since we're already having this conversation, right? Everybody grab Bitcoin. I need you to buy some Bitcoin right now. I need you to get into this. I need you, you know, think about it. I'm telling everybody, I'm telling all my friends, I'm telling everybody what needs to happen. I'm telling everybody what needs to take place. Get the Bitcoin, get into the trade, go ahead and get into the market. And then we reach euphoria. Well, right now we're at euphoria. So we're at euphoria. We just talked about us being at euphoria, right? Then we just have this conversation about euphoria. So you think about us being in euphoria right now. And so then it's going to come down and you see this little period of consolidation that's actually taking place right here. And that consolidation, that's the complacency. Okay. We're sitting in that complacency. So we're good. My trades are wonderful. They're good, right? And then all of a sudden they just start selling. It goes down. It goes down. So now we got anxiety. All right. We have the anxiety that comes with the market. And then we come into this denial. we come into denial. So, well, wait, it's going to turn around. My trade's going to turn around. Does that sound familiar? Somebody didn't put a stop loss in. How often do we talk about a stop loss? I didn't put a stop loss in my trade. I didn't do that. Okay. Now, how often? And then, of course, we go into panic mode. And when you get into that panic mode, now you just want to quickly sell. You hit your stop loss, or you tap out of your account, or whatever to happen, whatever takes place is because you're not understanding the psychology of the market. So when people say, oh, the market's doing its own thing, or the market's, off in another world, or whatever the market's doing, that's not true. The market is doing what it does. The market is in its cycle. This is what the market does. And then, of course, think about it. You start thinking, I can't afford to lose anymore. And then you get down here and you start thinking, why did the government allow this to happen? Why did the government, what happened? And so think about it for a minute. We always want to blame someone else. We always want to push and shift blame onto someone else. We always want to, make this not about us. We want to make this about what somebody else did. We want to, oh, the government let this happen. It's their fault. They did this. They did that. And so when you think about it from that perspective, and you think about that, now you're upset. And then now you have depression because it was invested, my retirement money. You think about what I put into this market. You think about, everything that's actually taking place. I just want you to put your mind on that for a minute. And now you're back at disbelief and it comes back around and it cycles again. And we go into disbelief and it comes back around and it cycles again. And so this is the psychology of the market. So why is it so important that when we sit down to take a trade, why is it so important that when we sit down, we cannot be emotional? Why is it so important that the only thing that we're plugged into is the financial news? Why is it so important that all we need to know is what's going on? All we have to do is check our red folders. All we have to do is mark our charts up. All we have to do, right? This is all we have to do. And so we want to leave our emotions at the house. We want to leave our emotions. We have to check those. And so even this morning, on this morning's call, when I say I'm going to rebuke those comments, because you have to make sure that your mindset is clear. Have you ever had a conversation with someone emotional? The market's already emotional enough because it's being ran and it's being moved by people who make emotional decisions. The people who move the market literally are emotional. So if that's the case, and you think about it, how much of the market do they actually control? How much of the market do they actually have? I mean, you think about it. So financial institutions are over 50%. So you just think about that for a minute. Financial institutions, what we know to be financial institutions, are over 50%. Our central banks, why we check all these red folders in the morning? Why do we do all of these things? They're moving over 50% of the market. Why, when the bell opens, why when we have that opening bell, does the market move in one direction or another? Because they're moving over 50%. And then when you think about the reported dealers, the investment banks, our commercial banks, those are banks like our JP Morgans, for example. When you think about all of that, they're controlling over 40%. So when I tell you, and even I'm gonna go back and address that comment where someone asked about manipulation, I'm gonna go back. How much do you really think they care about you? We control so much less than 10%. Right? We're well under the 10% margin of what's in the market. So if that's what we are, they're not concerned about us. They move the market. And this is why we say we ride the wave. This is why it's so important for you. This is the wave you're riding. You're riding it up, you're riding it down. You're cycling back and you're doing it again. You're riding it up, you're riding it down. You cycle around and you do it again. And that's it. That's all you have to be concerned with is riding the wave. So check your emotions, learn the skill set, chase the skill set, and the wealth will come. You with me? Chase the skill set and the wealth will come. So let me show you. Let me apply this to you for just a moment. So what we're looking at is GBP, JPY, British pound, Japanese yen, those two currencies. That's what we're looking at right now. And if you see this was back a while ago as we came up on 2018, right? This was a while ago. And when I'm looking at what transpired and I'm seeing what happened a while ago, I want you to see what happened with the market. It started with the disbelief now, and you can see that as this rose in, right, this rise, it rose, and then of course it comes back around. And look at that drop though. Look at that drop. Look how significant and how sharp that drop is. Just look at that drop. And now it's going to come back around again. So this actually was 2012 to 2018 when all of this happened. Now I want to show you this again. Now look at this. This was around 2008. Now we're looking at the same thing again. Started back around here with that disbelief, came up again, got to our euphoria, and then we shot back down. What happened in 2018? Just put it in the chat. Anybody know what happened? I'm sorry, not 2018, 2008. We were just on 2018. Same currency pair. So what actually happened? Like, let me go back to the previous one, and you could see where we came from the disbelief and we came up. So what actually happened? What actually happened in 2008? Nobody? Anybody? Drop it in the chat. Exactly. So as we're understanding, you guys are putting in the chat about the housing crash, the market crash, the real estate. Okay. So when you think about that, look at the market right here. Look at how the market crashed. But did you see how this exact same currency pair? Look what happened. After it recovered, it did it again. Okay. After it recovered, it did it again. So it's not about, remember what was one of those first questions that we asked? Why did the government allow this to happen? This is where we have to take that shift. It's not about who's in office. It's not about any of that. It's not about those things. It's about understanding the market is operating in its cycles. It's operating in cycles of what the market does. Now let's look at a different currency pair. All right, let's look at a different currency pair. What's happening, right? This is the market. So when I'm looking at this currency pair, this is Euro USD that I'm looking at right here. This is Euro USD. And when I see that, okay, you see how the market cycles around, and look what happened, what's happening. Just think about what's happening in the market today. But this is still where it came up on 2019 and before 2020. I didn't even bother putting 2020 up here, but I just want you to look at what happened in the market. Now, when I come back around, same thing. This was the cycle before. Look at how this cycle started going up. But that was the cycle before, because you can see now it cycled through. Now I started this one in 2017. So we're on a whole nother cycle. We're on a whole nother cycle. So same currency pair, back up just a little bit. What happened? You see how the market went up, and what happened? Same thing. Put it in the chat. What happened in 2008? What happened? It should be the same answer. It's not a trick question. It should be the exact same answer. And so when you think about what happened in the market is going through its cycles. And then of course, after that, it started recovering. It's going back up. Exactly the exact same answer. And you see that the market is going back up. And then we already saw how it cycled through again. We already saw that. All right. So that's where I really want your mindset to be. That's where I want you to understand. Now, this is important to those cycles. This is important to the strength of the market. This is important to what we're discussing right now. Now, why is that? We talk about currency strength, and you guys have asked me about the currency strength indicators. You guys have asked me about those things. This is something that I want to highlight right here. When you're trading, you're literally buying one currency and selling another. Now, you're not physically participating in those trades. Okay, you're not physically participating, meaning you're not the one that's actually, buying it. You're seeing all the transactions. You have buyers, you have sellers. You have buyers and you have sellers. So those are actually those transactions that you're seeing, okay? And I just want to make sure that you guys understand that those are the transactions. Those are the things that you're actually seeing. That's what you're watching manifest, okay? And I just want to make sure that you're grasping that from that understanding and that concept, that that's what's happening in the market, and you're actually watching these things happen, okay? So now, when you understand that, that means that each currency has strength. So I'm not really concerned with how much is, yes, I'm concerned with how the value of the US dollar, yes, I'm concerned with the value of currency, but at the same time, I'm not concerned with it when I'm taking my trades. that the value is what's going to help me understand which one moves and which one doesn't. The value is going to help me understand where it's going, which one is doing, who's stronger, who's weaker, and that's going to help me determine how I take my trades. So as I'm looking at this, you have a base currency and a counter currency. So we always know we have two currencies. When you look in the chat, I have a 777 in the chat. I have a 777 in the chat. And you always see GBP USD, USD JPY. You always see these currency pairs paired together. Now, those are two currency pairs. One's being bought, one's being sold. And when you see that, my base currency is always the first currency. My base currency is always that first currency. My counter currency is always the second currency, okay? My counter currency is the second currency. Now, USD JPY, USD JPY, the USD is the base, JPY is the counter. So which one is stronger? Which currency has the strength? Whichever currency has the strength is what we're buying. Whatever currency doesn't have the strength is what we're selling. So if my base currency has the strength, I'm buying that currency. If my counter currency is the stronger one, I'm selling the currency. Now on here, you see that I have the currency strength indicators. I don't pull them up anymore, but you can look at them because I don't want you to create a system of dependency on these things. But from a grand scheme of things, to just kind of help you understand, oh, let me see which one is stronger, which one is weaker, you can actually go look at those currency strengths. But the market is going to tell you. We've been on the calls in the morning and we're looking at the alerts and we're looking at it and we're like, okay, GBP is stronger. Okay, Euro is stronger. Okay, this is what's happening in the market right now. And because we're able to do that, then when you go check the currency strength, remember it's an indicator. So we've talked about leading and lagging. When we get to the strategy, I'll re-emphasize the leading and the lagging, but that lagging indicator, the lagging indicator is the one that literally is being fed by something. And so that currency strength is lagging. It's lagging because the market is leading. The market is where the information comes from. So there might be a shift or a change by the time you get to the indicator, by the app, by the currency heat wave or the currency easy currency or whatever app you're using. By the time you get there, it might be a little lag in it. That's why I stopped pulling it up, because you don't want to create that dependency where you're so dependent on that you stop using your analysis, because it's going to break that relationship that you have with the market. It's going to break that relationship that you're building where you're listening to the market and not allowing the market to speak to you. And that's not what we want to happen. We want to listen to the market. Okay, that's what we want to do. Now, before I go to the charts, this is the last thing I want to point out. Okay, before we get to the charts, this is like the last thing I want to point out. We have different types of analysis. And because we've had every single type of market, we've had the geopolitical market, okay? We've had that political market. We've been in a market where we have the economical market. We've been in a market where we have the bank market, where it's being impacted by what's happening, the central bank. So we have all of those markets that's been happening. And so it's so important for you to understand that whether we're talking about the fundamental analysis from the central banks, the geopolitical, or my economic release, it's so important for you to understand your analysis types. So when I'm dealing with technical analysis, when we get to the strategy, blue line cross over the red and the upward or downward momentum, red candle, flat bottom, flat top, piece or flip, top or bottom, that's technical analysis, okay? That is my technical analysis. So those are my trends. That's my price movement. That is the volume. That is what's happening, right? That's all technical analysis. And so to kind of go back and say, you know what, I want to stop. Let me back up just a minute. When we're talking about, well, the stochastic is right there. Well, why is Bitcoin, and we're going to just ride Bitcoin out on this call tonight. Why is Bitcoin still rising if the stochastic is around the 80? Because we've shifted into fundamental analysis. right? When we're looking at when that bell opens in the morning and we're looking at, okay, where is the market going? What's it doing? It's 9:30. Wall Street just opened. It had news that just happened. It had things that transpired overnight. Which way is it going? And someone always, I can guarantee you, somebody always asks the question, why? The stochastics at the 20, why are we selling? This is at the 80, why are we buying? Are you paying attention to this? Your mindset, relationship, fundamental analysis, those are the factors. What do we even have this morning? Unemployment, right? How's the economy doing? Talking about a shutdown. How's the economy doing? What are factors? This is where we say check your emotions. I don't care. The market doesn't care if you want to shut down. The market doesn't care if you don't want to shut down. The market doesn't care about those things. That's why we have to, you made a decision to step into wealth. You made a decision to step into greatness. You made a decision to be your own bank, okay? You made a decision to think like a bank, act like a bank, become your own bank. This is where, you know what? We control less. We control less than 10%. That's why we ride the wave. So it doesn't matter how you feel. It doesn't matter what you think. It doesn't matter, you know, should this happen? Should they do this? We have to eliminate all of that. Fundamental. What factors influence the price? If nobody's working, money's not being stimulated into the economy. How do the central banks feel about that? How does the economic release impact the market? How does that? That's my fundamental analysis. So those factors, those external events can override my blue line cross over the red. It can override that. And so that's what we have to understand, that it's overriding it. And then as we look at it, and then as we see it, the things that you want to now, you want to look at, the things that you want to see now are my sentiment. People, unemployment came out today. When we're looking at non-farm payroll, when we're looking at those things, how do they feel about it? How do the ones who move the market, how do they feel about what happened, right? So when you're looking at it, market came down for a minute and it goes back up. Economy shutting down. Is it going to sell the market? Is it going to is it factored in? Is it not factored in? Okay, are they saying, you know what, we've been here already, we did this before, we did this in March, so we already know how to react to it? Or are they saying, you know what, not again, we still haven't recovered? So how do they not how does your personal household react? Not what do you do, because you'll be economically unbothered. You'll know how to navigate because you're riding the wave. So not that, oh no, these kids can't go back to school. Not, oh no, we have a shutdown coming, I can't go back out to eat. Now I can't take a trip for my birthday. No, that's your sentiment. Your sentiment doesn't move the market. Your sentiment doesn't impact the market. You have to be in that position where you understand what's happening. You have to be in that position where you understand what's transpiring. So you have to put yourself in that position. So before I transition to the charts, questions, comments, testimonies, drop it in the chat. Questions, comments, testimonies, drop it in the chat to make sure, because I want to make sure that each and every last one of you all are with me this evening. I want to make sure that each and every last one of you all understand exactly what we're talking about. Drop it in the chat, drop it in the chat, drop it in the chat. That was an amazing breakdown. Thank you, Nuggets, great info. That was awesome. Well, thank you guys. So that's I said questions, comments, drop it in the chat. So that makes sense. I understand. Well, that's awesome. That's awesome. That's awesome. So now let's transition to the chart. That's what we're going to do. We're going to transition to the chart. So as we transition to the chart, the first one I want to pull up before the strategy. Now look what I have. I have Bitcoin on a monthly. So you say no need, thank you. You guys are so welcome. You are so welcome. So now as we're looking at this, will those handouts be on the website? No, the recording will be, this recording will be on the YouTube channel. So that's where this will be. That's what a recording will be. So now when you're looking at this and you see the, I have Bitcoin on a monthly. Now, I want you to pay attention to this. So as we're looking at this, look what happened. We had our depression, we have our disbelief, okay? We're riding this up, we're riding this up, we're riding this up. We reached euphoria, complacency, and what happened? bam, a drop off, right? We had a blow off top. So what did we just talk about on before? What did we just talk about the other day? And I'm gonna break it down because this is this month, okay? You see, this is the month of November. I have it on a monthly chart because I want you to see what happened. So when Bitcoin actually, you can see when Bitcoin came on the scene on the charts, and now you can kind of see where it didn't, it was low. You see how much it costs. You see that zero line, that zero, that's how much it costs. It was $0. So yes, we talk about pips. Yes, we always talk about the pips and we talk about those things, but that was $0. So now you see that it rises in value. It's risen, and it gets to a state of euphoria. You see, this was 2017. It got to that state of euphoria. Doesn't this look like that chart we just saw? And that nice little drop, and it goes through that little cycle and it comes back up, it goes down a little bit. Now look what we are. We're at that state of euphoria again. So we're at that state. Now, this right here had a lot of what we call, what do we just look at? The fundamental and the sentiment analysis. What were our external factors in March? COVID. So Bitcoin reached a low. You see what happened when COVID hit. So now you're seeing your analysis implemented into the charts. So my analysis, this was, look at what this was doing. It was coming back up. It was starting to rise. That blue line crossed over the red and it just shot down. Look what happened right here. This is COVID. This is our COVID month. This is our shutdown month, right? So you see what happened with Bitcoin. And now we're rising back up and we're reaching that state of euphoria. So what is a blow off top? What is a blow off top? So we talked about it on Tuesday, but I'm gonna reiterate it today. What's a blow off top? So it's when you have that steep rise in value and it's followed by a sharp decline. Now, you're gonna have a massive rally without many pullbacks. What have we already had in Bitcoin? A massive rally without many pullbacks, right? That's actually what has already happened. That's actually what we saw. And then it's hard to determine. Now you're gonna get some pullback. So I'm going to come down to my hour. I'm gonna come out of this monthly chart so you can see this in actually, let me sit on a 4 hour. I wanna share with you. No, let me come back down because this was that nice little drop. So now you're seeing that we had, I'm gonna move my stochastic just so you can see. I want you to see the whole thing. You can see how this was rising. We didn't have much pullback. We didn't have much pullback. And I mean, we have gotten paid well. And then what happened on Tuesday, I wanted to talk to you about a blow off top. We needed to have that conversation. And so what happened, it reached that point. It reached this point. And I told you that it was going to go between 18.2 and 18.4 is where it was going to rise to. We took profit at 18.4. We took profit right here. And we talked about the blow off top. We talked about the fact that when it blows off, you're going to have that sharp decline. It can actually drop down to like $12,000 again. So we talked about that. Now, and understanding that, and what you're seeing, this is what happened. And this happened in a matter of minutes. This was $1,000, $1,000. It dropped 1,000. So whatever your lot size is, multiply that by that. So it dropped just that much. And as you can see, that was that. So now, is it a blow off? Is it a pullback? What is it? You don't know. And that's the thing about a blow off top. That's the thing about where we are in the state of euphoria. That's the thing about that, because Bitcoin, this can just be consolidating until it recalibrates and it pushes back up to the $20,000 mark, because it's very possible that that's where Bitcoin is going, up to about $20,000, because of all the fundamentals, because of all the sentiment that's happening. However, it's difficult to determine, is it going to do that? Or was this just a pullback? Are we just in a state of consolidation for a minute before it breaks out of there and then takes its rise? Or is this just a little pullback and then it's going to drop, it's going to decline? And that's because of all the factors that are out there. So that's what this is. And I wanted you all to understand, because an educated trader is a profitable trader. An educated trader is a wealthy trader. An educated trader is someone who can definitely take this to the next dimension. So questions, comments, testimonies, questions, comments, testimonies. Amen. Amen. I like that. I like that comment. I like, because education, educated, we have to be educated. So no questions, comment. That means you all with me. You all understand the psychology of the market, right? The psychology of the market. So we definitely want to always be operating with that mindset. So now, when I say no emotions, now you understand why that's so important. When we say no emotions, applied knowledge is power. Knowledge in itself is not power. I love when I hear someone say that, because now we say knowledge is power, but what are you going to do with that knowledge? I can have all the knowledge in the world, but if I don't apply it to anything, if I don't execute on it, if I don't act, push the button, get enrolled into the academy, what are we doing? I can know something. I know this information has been hidden in plain sight. I know this information is needed. I know I need to be learning this skill set. I know that I need to create my own value. That's knowledge. But what is applied knowledge? Applied knowledge is enrolling, learning, pushing the button, not sitting there watching the market pass you by. Not even in your demo account, we don't want to push the button. Push the button. That's the only way you're going to develop and learn that skill set with the market. So you want to make sure that we're operating and we're executing in that. That is so critical and so important. So we have to apply the knowledge. It's not a myth. It's not a fantasy that I can be wealthy. It's not a myth. It's not a fantasy that I can create my own. It's not a myth. It's not a fantasy. It is a reality. It's something that will happen. And that's why we walk in those affirmations. And on our calls in the morning, you don't see me saying, yes, here we go, take profit. This is take profit. Well, now I show you how to apply the harmonic scanners. I show you how to apply the bounce back. We show you how to apply it, but you don't see me lining everything up for you, where it's take profit. This is your take profit one. This is your take profit two. This is your entry point. No, you need to determine that entry point. You need to determine how to get into that trade. You need to determine how to do that. That's why our chat stays flooded. That's why it's so many people with a 777 in the chat. That's why so many of you all are walking in the wealth, because of what you're able to accomplish. That's why this is happening. And that's why this is here. So thank you for that comment. Thank you for that. You got me fired up. Applied knowledge. Now, this was Tesla, right? We're trading everything. We're trading stocks. We're trading everything. This was Tesla. So you all definitely, we don't have to buy the stock. I don't need to buy a Tesla. I don't need to have $500 to buy a stock up, meaning one. So how many $500 Tesla stocks do I need to have in order to take profit, right? So how many of those do I have to have? So I don't have to do that. Now, I see your hand up, drop your question in the chat. I promise I'm going to answer it if you just drop it in the chat. So make sure you drop it in the chat. So now, you're welcome. That was very well explained. Thank you. So we profited on the movement. So from a $5 movement in the market today, actually it went up to more than that. Let's say about 15. So from a $15 movement in this particular stock today, because I definitely saw all of the 777s on Tesla. So from a $15 movement on a stock today, based on your lot size, what you applied to this movement is how much profit you took. So but I know for a fact, not one of you spent $500. Not one of you did that. So that's what you said. That's right. So that's what this is all about. Now, this is also where we're going to be going. All right. This is where we're headed. And I want to share this with you, and I want to see if I can pull something up. I should have already had it pulled up, but I don't. So forgive me. I apologize. And it's a reason why I want to get into this. And it's a reason why I want to do that, because if you look at this this was something, and while we get into this market structure, because as you're looking at this, what you're seeing is, if this thing works with me, just a moment, I'm having, just a moment, just a moment, just a moment. Because if you work with me just a moment, okay, here we go. My mouse decided to go elsewhere for just a minute. So if what you're seeing and what you're looking at is, you're seeing the market, and I do not need this to lock up right now. Technology, technology, not right now. So let me just talk through this as this thing decides what it wants to do. So as you can see, as I'm looking at this, you can see that support and resistance line that you have on there, okay, that support and resistance line that we have on there, what that is liquidity. Oh, you're trying to explain and answer that question, but I'm trying to get my computer to stop being locked up. So I'm just kind of walking through it, because I was trying to pull up the compounding sheet, and it decided that, me trying to pull up counting sheet, is definitely locked on me, and I wanted to stay right here. So, but what I'm trying to show you is, if you look at this screen, if you are on a call, you trade that actually that I'm looking at right now, and that's, but if you see that it was, we took it and marked it up, where you see that solid pink line, that solid pink line is actually the line where we were able to look at it from the perspective of understanding where the trends are. That's what we're able to do with that. So understanding that that's what we're able to do with that, and block it off. You see, I'm talking you guys through this, so just bear with me just a little bit. Oh my goodness. So, but as you can see that that's transpiring, and you see that that's happening, what you are actually looking at is the fact that this is definitely not allowing it to do that. So what we're doing is making sure that you all have the understanding, the big breakdown of the market, understanding the big picture, the big grand scheme of the market. That's definitely something that we have to understand. And then we also will be able to take that and implement the tools. So as I am trying to do this and it is still not allowing me, if you have a question or a comment, drop it in the chat for me right now, as we have, out. So let's see here. Can you hear me? Can you all hear me? I just want to make sure you can hear me. Drop it in the chat. Okay, so you can hear me, so that's not me. You know what? If you don't leave me alone, but I don't have a computer, I have a Mac. Not today. We're not gonna start that right now, as I'm trying to get this thing to do what it's supposed to do. And yes, I have a Mac. It was because I was trying to do more than what I was supposed to do. I was trying to do a lot more, trying to make sure I could share this information with you all and make sure that I can get to that. So that's definitely what I was attempting and trying to do. I think I might be back. Hold on. So right now is the time for you to drop a question in the chat. So when we get to the strategy, if I can get back to the strategy, I can actually show you. If I can get back to my computer screen, I can actually show you what that's going to mean. Like, I can actually show you what in the time frame confluence, because that's what I'm supposed to be sharing with you right now. I tried to get fancy and show you guys the compounding sheet, and obviously it's not allowing me that. Right now is the time, the questions, comments. So understand, and I'll just walk you through the time frame confluence. So as you look at this, okay, I'm on a 15-minute chart, which is on this 15-minute chart, understanding that. Now, if you look at where that pink line is, and you definitely see, so at the bottom of the screen, you have what's called my stochastic. So my stochastic is the bottom of the screen. Now, as you come here to the top, so this is my stochastic. So the stochastic blue line cross over the red in a downward momentum or reverse. That is my leading indicator. Then of course I have my blue line that cross over the red in an upward momentum. So if you look at the bottom, the indicator that's at the bottom, okay, within the purple shaded area, that is my stochastic. I cannot put the mouse on it. I'm trying, but you can see that that's that shaded area. So you have that blue line with the red in a downward momentum. I have a blue line that crosses over the red in an upward momentum that happens around the 20. So what does that mean? That means that that is my leading indicator. That's my leading indicator. And with that being my leading indicator, okay, that being my leading indicator, then what happens is that helps me determine if I want to take a buy or a sell. So once we mark up and understand our market structure and understand where we are, then even though those yellow lines would have technically been our take profits from what we looked at this morning, as you can see that we only reached one of them. So looking at where the first initial, do you see where the red line touched the orange line? You guys got to bear with me just a little. And hopefully you can hear me right now. Yes, no sound. Can you hear me? Drop some. Okay. So this is why I'm logged on twice, because this is what Zoom loves to do to me. Zoom will kick me out in a heartbeat, and hey, that's okay. So understanding that, so don't laugh at me tonight. We're gonna get this information out. It's way too powerful. This information is way too important for you to have. That's why we're having a hard time getting this information out, because it's way too important. It's way too powerful. And this is something that you all need to have, okay? This is information that you all must have. So you say you're riding with me, no worries. That's why I love you guys. So yes, there's a backup plan to the backup plan. That's why I have my cell phone connected too. You guys know Zoom, how much Zoom loves me. But on the other side of that, from that other understanding, is I was trying to walk you all through the strategy. If this does not reconnect, that's okay. But what I really want you all to do right now is, let's take a few minutes, because I'm about to transition this call. You all had a lot of information tonight. We talked about the market. We talked about the different, we talked about the market. We talked about the different things that transpire in the market. We talked about the different types of the different types of analysis. So we talked about all of those things. And so right now is definitely the time for you with any questions, comments, or testimonies that you have. If you stay ready, you don't have to get ready. Yes, I love that. If you stay ready, you don't have to get ready. That's absolutely 100% factual. So any questions, any comments, any testimonies, because now if this information was helpful on any level, let me get a 555. If it was helpful on any level, oh, well, thank you. I love that. You say you are wonderful as usual. I love that. You guys know how much I love you guys. So now, does this give you a better understanding and a better picture of what the market, like, does this really give you a better, just more clarity? Because that's what we want to do. Now, of course, next Thursday is Thanksgiving, so we won't be on here for Thanksgiving, but you know, we don't do the US holidays, but I want to make sure that you all understand, you know, what's actually transpiring and what's happening in the market, because we are going to be gearing up back into our trending markets. You've seen a lot of the reports, you've seen a lot of the banks, the central banks around the world globally starting to give their analysis, their interest rate decisions. We've seen a lot of the banks coming out with a lot of information. And so that's going to help you. And then, of course, I don't want anybody caught in that YouTube pullback. So definitely. So you're going to watch the videos during the holidays. You definitely see the framework for what you see daily. I love that. Now, YouTube, it gets updated as soon as it is possible. You know, it gets updated as soon as possible. So yes, you know, yes, ladies and gentlemen, I do have a life outside of the training calls. So they do get uploaded. But they get uploaded quickly and as soon as possible. So it will definitely be there. So yes, it was helpful. I'm so happy to hear that. I'm so glad that you all see that and that you feel that. So now, emotions. I'm gonna end this call talking about your emotional state. I'm gonna end this call talking about your emotionals, but don't log off. Do not go anywhere, because you know we're about to transition this call. You all know that's actually what's about to transpire. So please do not go anywhere. But I want to talk about your emotions and your affirmations. Now, your affirmations and your emotions are critical. Your affirmations and your emotions are very, very significant to your success. And I definitely want to make sure that you all understand that. You cannot do your affirmations and then speak doubt. You notice that when we're in the chat, you notice that you have to walk in that. You have to walk in that anointing. You have to walk in what you declare and decree. We're here to become wealthy. This is the largest economic empowerment movement in the history of mankind, is what this is. This movement is just that important. This movement is just that serious. So as we understand what you declare, BYOB is putting you all in a position to put you on the other side of wealth. BYOB cares about your success. Be your own bank. We care about you. That is what we do. We care about you. So understanding that we care about you, your success, that's why we emphasize and stress your mindset so much. So it'll be over 100 people on this call sometimes. That means that chat should be flooded with over 100 people saying, I am a BYOB master trader. I am the signal. All my trades and in profit, I am 777. That is what we should hear all the time. When you declare and decree that you're a master trader, we have individuals from 6 to 83 trading on this call. We have an 11-year-old that actually has been riding that Bitcoin. We have an 11-year-old that has actually been making those trades. So if we have an 11-year-old that can take those trades, we have an 11-year-old that can operate in the mindset and the skill set, then no one has an excuse. What it is you have to get past your mindset. You have to get past your thought process and understand that you can declare and decree. Imagine this, the legacy shift, the legacy pivot, the legacy movement. Just imagine for just a moment when you have a 6-year-old, you have an 11-year-old. They are not old enough to work. They are not old enough to maintain employment. They're not legally old enough to do what society says is required. But yet, they can look at the same charts we were talking about tonight. They can look at the same information that we were discussing this evening, and they can take profit. They can cash out. They can make withdrawals out of the market. Now, I don't know about you, but to me, that's motivational. So we have no excuses. From 6 to 83 is the range that we have on this call. From 6 to 83 is the thought process that they have on this call. Their mindsets are clear. So where are you? Are you ready? Are you ready? Are you ready to become your own bank? Are you ready? Are you ready? You said he said thanks for the shout out. I tell him I love it because that's exciting. That's what this is. So are you really ready to become your own bank? Are you ready to the skills? Yes, your 7-year-old is about to learn. Put them on it. Put them on it. Have them listen to the calls with you. Have them sit with you. You include them, you don't exclude them. You include them, you don't exclude them. So remember what's happening. Remember what's going on. Remember what's shifting. Remember what's happening in your mindset, in your household. Understand what that is. What's happening is you're changing communities, you're changing legacies, and it begins with you. So first you must believe. First, you must believe that you can do this. You must believe that you're powerful. You must believe. And no, we're not working every day on changing our mindset. You've changed your mindset. It starts with a decision. We don't work on it. If I declare and decree that I'm working on it, then I'm always working on it. If I declare and decree that it's going to happen, then I will never reach that objective. So it's I am. We speak in the now. We speak in the positive. We speak in the affirmative. We speak in the today. So it's the I am. I am a master trader. I am wealthy. I am a billionaire. I am 777. Not, oh, well, I don't get it. Oh, well, no. I am. If I'm working, if I'm coming, if it's gonna get here, if it will be, then guess what happens? You will always be chasing it because that's what you just declared and decreed. I will understand one day. Well, one day is never today. One day is never today. Today is today. So I am. So with that being said, ladies and gentlemen, I've had a wonderful evening and we overcame technology. We're going to always overcome. We're going to always rise above. We're going to always move, right? We're going to always do that. And so we'll just shift the last part of this training to Tuesday as we gear up for the holidays so you can be prepared and you can be put in place. But today, you're going to walk in the I am. You are. And you understand the big picture, and the big picture is your mindset. The big picture is what you are declaring and decreeing. That's the big picture. So you're going to have the big picture of your life and the big picture of this market. So with that being said, I am. And what I am about to do is I am going to transition this call. I do not go anywhere because it's time for your RX for Forex. Do not go anywhere because if you thought tonight was powerful, it's about to get even better and better. So right now, I'm going to transition this call. I'm going to transition this call to a gentleman that I have a tremendous amount of respect for. The gentleman that I'm turning this call over to has a PhD in finance and economics. And we call him the finance doctor because he is the one and only finance doctor. So without any further ado, Dr. Craig Bythewood, are you on the line?
Yes, I am, Miss Tasha M. Dyer. I am on the line, ready, willing, able, and blessed to be able to have the opportunity to greet you on a talk with the finance doctor, your RX for Forex. So let me begin by just thanking Ms. Dyer for the energy that you've been walking in today. I'm not really sure what you put in your Wheaties, but it started at 4:59 a.m. this morning. You just came to the call on fire, and you've been on fire all day. And when you're on fire, that creates an ignition in everybody else. This movement feeds off of you. So this has been one of those days where I have felt the energy of individuals catapult. So thank you, Ms. Dyer, for whatever it is that you had in your cinnamon toast crunch this morning that put everybody where they are. So thank you. I've literally felt people's energy vibrate. I've literally felt individuals break through some barriers today. I know you do this every day, but just there was something different about today. And I'm just calling it out and I'm thanking it and I'm showing gratitude to it. And I'm also, since we're calling out, I'm going to call you out in that lie. Did y'all hear her say, y'all think that my whole life is trading calls? It's not. Yes, it is. Her whole life is trading calls. And you don't believe me? Ask Deja. Ask 6-year-old Deja as she teaches her 2-year-old niece, because literally they're in an environment where they feel the energy of their mother and grandmother changing lives, literally transforming energy. So I am just grateful to be a part of this movement and to, just like you, be under the tutelage of our trade whisperer, Miss Tasha M. Dyer. So welcome to a talk with the finance doctor, your RX for Forex. For those of you that are new, this is a phone call in which we take seriously that preposition with, simply meaning that we have a dialogue, we have a conversation. So in Miss Dyer's training sessions, it's chart based. Therefore, you're going to make sure that you put your question in the chat. But this, on the other hand, is conversation based. This is a talk with the finance doctor rather than a talk from the finance doctor. So please unmute your microphone if you have a question. On this call, we take advantage of the fact that personal finance is the only area of our society where the individuals who give you information about the products happen to be the same individuals that sell you the product. I'm interested in insurance. I need to find out about different insurance products. Who am I talking to? The insurance salesperson. So we really don't have in our society a forum where we can have objective conversations about personal finance and economic empowerment. So that is what we get to do on these calls. And that is a beautiful thing. So before I jump right in, or better yet, before I open it up for questions, let me talk a little bit about some of the things that Ms. Dyer said in her fireidity. Did he say fireidity? He did. He said fireidity. So in her fireidity, she ended the call by talking about the fact that your affirmations have to be present. So let's go a little bit deeper than that. First of all, let's talk about I Am Academy. You know, IM stands for International Markets, but they purposely use the acronym IM because it is a play on words for the concept of I am. They recognize, just like we do, that whatever you put on the other side of that I am will be your existence. Now, notice that she said, Zoom kicks me out. She said before, I'm on a Mac. So there's conversation about computers, there's conversation about devices. So let's just think about that for a second. The way computers work, the way devices work, they're going to do what we ask them to do. So if we want a computer to do a certain thing, we create a software, we do coding. And we do that and we put it on the computer, and the computer does what we ask. The computer does, it appears like it thinks, but in reality, it's literally giving us back whatever we give to it. So I need you to understand something about the human brain. I've mentioned before that in 2009, I was diagnosed with a brain tumor. So I began to study the brain because I made a promise to my 9-year-old that's now 19 that I was going to stay on earth and be with her through all of her milestones. So I began to study the brain. So let me tell you something about the brain. The brain is a computer, and the brain only recognizes present tense. The brain has no concept of past or present. We, in our conscious thinking, create concepts of past and present, but in reality, the brain is just a computer. It simply is going to record whatever you give it. It's simply going to give back what you give to it. So if you say, I am going to be, then you're telling the brain to operate in a status of going to be. Therefore, that will be your reality. Your reality, your present will be based on getting to that. And we're so quick to say, I'm working on it. I'm going to get there. There is science that backs up Ms. Dyer's comments. We say I am because we know that in order to be it, you have to see it. Faith is the evidence of things unseen. So I had a conversation with friend of mine the other day, and he said, I have to see it first. And I said, brother, I'm going to pray for you because I have to do the opposite. I have to know that it's going to happen and then it becomes. But if you have to see it first and then take action, that's not the way the universe works. That's not the way spirit works. That's not the way the brain works. The brain only recognizes present tense. And I bet some of you that are walking in your muted mics right now, if you just think about it, think about some of the things. Can we be honest? Can we just be real in this one moment? I don't see you, I don't hear you, but you see yourself, you hear yourself. Just be real. Think about the things over the past 10 years, over the past 20 years that you always say you're going to do, that you're going to work on. You're still doing it. You know I'm telling the truth. You don't even have to unmute or put in the chat that I'm right. I know I'm right because that's the way humans operate. The human brain only recognizes present tense. So if you're working on it, you're telling it to be in a state of it being in a future that will be unobtainable. I am, I am, I am, I am. I am sends a message to the universe that says, all right, let's get going. We got to take some actions to make this person's brain state become a reality. I'm working on it. I'm going to be. Okay, let's get going. Let's put some things in place so that he's going to. I am. Questions, comments, testimonies for the finance doctor. Questions, comments, testimonies for the finance doctor. So, 2 finance doctors ago, right at the end of our conversation, someone put in the chat, what about IRAs? The conversation was about CDs. Please go back and watch it if you weren't present. Excuse me. And the conversation about CDs simply made the point that certificates of deposit are the #1 money market investment, but they happen to be the worst money market investment. Why? Because it takes away your liquidity and does not compensate you for it. It has a maturity and does not compensate you for it. So you're earning a very small interest rate when you could get the same interest rate without sacrificing your liquidity and without having a maturity. Therefore, it really is the worst. We also ended that phone call by saying, even though it's the most popular and even though it's the worst, we don't care because we have a vehicle that allows us to make more in 8 seconds than a CD can make in 8 months. So we're good with that. We just want to have the conversation so that we're strong in our economic empowerment. So while I was having that conversation, someone put in the chat, what about IRAs? So let's talk about that. Let's talk about what about IRAs. First of all, an IRA stands for an individual retirement account. An individual retirement account. Individual retirement account. Now, I've always found it extremely interesting that every single time, not most times, but every single time I talk to someone and they have an IRA, they have an individual retirement account, I always say the same thing and I always get the same answer. I say, who sold you that? And then they tell me who sold it to them. Because people do not go out and buy IRAs, they are sold IRAs. Well, one of the things that I teach people all the time, in fact, let's go back into my history. When I was growing up in this industry, I was a professor in addition to being a consultant and a chief financial officer. And in my professorial life, I would teach a class called personal finance. And there was a subject that I would always teach in personal finance, and it was called millennial buying. Now, this obviously was around the year 2000 when we got into the point where we changed the millennium. So we went from the 1990s to the 2000s. So it was a really cute way of describing it by calling it millennial buying. And what I was saying to them was this: last millennium, there's a certain way in which we would buy things. But this millennium, it's different because this millennium, people are very aggressive about selling you things. And I always say this to my clients: do not be sold anything, only buy things. Do not be sold anything, only buy things. Have nothing against the concept of selling. Those of you that are in sales, more power to you. Love you. I'm not anti-salesperson. I'm pro-household. And if a household recognizes that you should choose to buy something, you have power. Be your own bank. Banks are not sold things. You think people walk into banks and say, hey, got this great product for you? No, banks take control of the infrastructure and say, this is what we're going to offer. This is what we're going to buy. This is the software we're going to use, but they certainly don't get sold things. So since we're being our own bank, we need to be the same way. So whenever I hear someone say that they have an IRA, I know that it was sold to them. Why? Because there's a very high commission associated with IRAs. That is also a strategy I used to give to my millennial buying students. I would say the most important question you can ask in millennial buying is this: how are you compensated? How are you compensated? I will go to a car repair place in a minute and ask the question: excuse me, sir, are you paid by commission? Why are you asking that, finance doctor? Because if he's paid by commission, there's an incentive for him to sell me more services because that is how he's compensated. So by asking that question, it gives me the leverage and the power to be able to have a more intelligent conversation with that person and know that whatever I ask for, the answer I'm going to get is going to be based on his profit model. It's a legitimate question, and you should be more aggressive about asking that question. They're your dollars. You have control. You have power. Too many times, we allow the individual on the other side of the transaction to control the way we do things. But we're in control. It is our money. We decide. You ever notice when you walk into dry cleaners, there's no prices? Think about that for a second. You go into the dry cleaner and there are no prices. So they expect you just to buy or make the decision, and then you find out afterwards. No, millennial buying. I will say, can you please tell me what your prices are? And then they begin talking and kind of walking around. Depends on this. Well, can you give me a list of your prices? Well, we don't do that. Okay, thank you. Have a great day. And I'll go to the next dry cleaner that'll give me a list of prices. All I'm saying is, it's not about being frugal. No, we're about wealth and abundance. This is about taking control. This is about empowering ourselves and making sure we're in the right position to have strength and value in our dollar. I would like to know what I'm getting for this value. I'm cool with paying it, but at least you got to let me know. Don't just sell me something and don't tell me the price. I need to know. Now, think about it. There are a lot of situations in which you guys do this and you don't even realize you're doing it. How about I prove it? Would you like me to prove it? I'm going to prove it to you. Right now, of course, I don't see you. This is just hypothetical. This is just what is that word when you ask a question that's not really a question? Whatever that word is, it is escaping me right now. I didn't eat Cinnamon Toast Crunch this morning, Ms. Dyer.
Rhetorical question.
Rhetorical. Thank you. Rhetorical. Thank you. This is simply rhetorical. It takes a village to teach this class. So it's rhetorical. So just do this. Rhetorical. Raise your hand. Don't type it in the chat. This is rhetorical. Raise your hand if you have a credit card. Okay. What was the point I was making? The point I was making is that we buy things and we don't know how much they cost. So let me ask it again. Rhetorical. Don't type it in the chat. This is just you and you. Raise your hand if you have a credit card. Okay. What's the interest rate on the credit card? Silence. So some of you have credit cards and you don't know what the rate is. That means you purchased something and you don't even know how much it costs. So all I'm saying is, oftentimes we blindly walk into these areas where we ask for something and we buy something, we purchase something, and we don't even ask what the price is. And we allow these companies to very accurately and aggressively put us in a position where we don't ask. We should always ask. We should always be in control. So I said all that to say this. People who have IRAs are always sold the IRAs. How do I know? Because it happens to have one of the highest commissions on personal financial advisors. Personal financial advisors want to get paid. So they push IRAs because it has a very high commission rate. You knowing that, you understanding it now means you look at it and say, okay, what am I getting out of this? Now, why do I care about IRAs? Are you saying you don't want us to have a retirement plan? Of course not. Now, I have to go ahead and preface my answer to this question about IRAs. We're giving you a little background. This particular subject that we're talking about right now is important because it helps us to manage our ability to economically empower ourselves. But it is also irrelevant. Why is it irrelevant? Because we are being our own bank. Why is it irrelevant? It's irrelevant because we have access to a vehicle which allows us to make far more than we could make with the IRA. But it's important that we understand it because think about it. There's a vehicle that hasn't come out yet. There's a vehicle that's going to be offered in 2035. And this conversation allows you to be able to understand how to break it down, the underlying scenario as to why something exists. And when you understand why it exists, you have power. I know you never heard this before, but there's a Bytwoodism that says if you know what you're doing, you will always have a job. And if you know why you're doing it, you will always be the boss. So this is about IRAs, but I have to start our story way back in 1997. What? He's going to go all the way back to 1997 to ask a question that was asked on November 17th? Yes. Now, here's what happened in 1997. I was a hotshot young professor working for Florida A&M University. And I chose to work for Florida A&M University in Tallahassee, Florida, because it had a program where you teach in the fall, you teach in the spring, then in the summer, you would go do what's called a faculty internship program, and you would go and be a summer consultant with the firm. I thought that was so cool. I was young, wasn't tied down, had no kids. Let me go and make this thing happen. So in 1997, I was given the opportunity to be a consultant for a company called HP or Hewlett Packard. They had 80,000 employees at that time. It was in Northern California. I lived in a place called Mountain View, California, which is right outside of San Francisco. I think it's the most beautiful place in the country. Beautiful, beautiful city. I went to Hewlett Packard to work there for 4 months. Now, it was a 4-month contract. I knew the answer to the question they wanted me to ask in 4 hours. I got there and they said, okay, Dr. Bythewood, this is the assignment that we want you to work on for the next 4 months. Now, here's what's going on. We, Hewlett Packard, have 80,000 employees, and we have a scenario where we're paying them what is called a defined benefit pension plan. Defined benefit. Now, what defined benefit means is that the company decides what you get. You work for the company, then you retire, and then Hewlett Packard gives you the benefit. Here's your benefit. Here's your pension, defined benefit. So they said to me, well, Dr. Bythewood, here's our situation. There's this new thing out called defined contribution. Now, let's go back to that. Now, why was there something new called defined contribution? Because the government has something called Social Security. And Social Security was invented to provide pension plans for individuals who work for the system. Well, the population growth, the multiplicative impact of people coming on the planet was higher than the amount of money that was going into Social Security. So they looked at it and said, the number of people that we have to give Social Security to versus the amount of money we have, there's a mismatch. So we need to find a way to address this. So the government came up with something called defined contribution retirement plans. So instead of it being about the benefit, where the company is going to decide how much you get, now we're going to make it about the contribution, which means you're going to now make a decision when you get a job to participate in a retirement plan, and then you're going to tell your company how much to put in it. And you're going to tell your company where the money goes. And you're going to tell them what investments go in. You may have received a big packet at some point when you got a job, and they said after 90 days, you'll be vested and you'll be able to do this. And you can put whatever amount of money that you want to put in here. And then you decide what it's going to go, where it's going to go. We call that asset allocation. So now you're going to be a participant in your own retirement plan. So Hewlett Packard's question was this: should we continue to offer this defined benefit plan, or should we move to a defined contribution plan? 4 hours. 4 hours, I knew what the right answer was. What did you do for the rest of the 3 months, 29 days, and 4 hours? Chilled, enjoyed being in Northern California, enjoyed my time as a faculty consultant, did other projects, learned other things, but it was an easy decision. You know why it was an easy decision? Because Hewlett Packard had a staff of 9 people called the retirement. I thought he was talking about IRAs. He will. So Hewlett Packard had a staff of 9 employees. And I need you to understand something. When they say that Silicon Valley, the technology is a different level, it is. So this is what was going on. They had these 9 employees, none of them had advanced degrees, and what they would do every day is they would code. They would use their own computer language, and they would write codes on how much Hewlett Packard had to have each day in order to be able to finance all of the retirement plans that day and all the retirement plans for anybody who retired on that day. And they did this every day. And all 9 of them would come up with their own calculations, and they would compare them. Now hear me. Hewlett Packard's job was to make the calculations and then pay the defined benefit, not only for the people who are retired now, but all the people who are going to retire in the future. So you're asking me, should you continue to hire these 9 people, continue to make these calculations, or put it in the hands of the people and say, people, we no longer have anything to do with it. You decide how much money goes out of your check. You put it in what's called a mutual fund. You decide what type of mutual fund it is. The mutual fund will invest the money, and then you get your money. So from Hewlett Packard's perspective, that was easy. Dump the defined benefit plan and instead move to a defined contribution plan. The mistake they made, this is about IRAs, but I got to tell this part of the story. The mistake they made is they put me in alignment with the 9 people. The 9 people picked me up from the airport. The 9 people were the people I socialized with. The 9 people were the people who took me out and showed me the town. So you mean to tell me you're asking me to make a decision where if I decide for you to go to defined benefit to defined contribution, all these people lose their jobs? Yes. So I said back then I was going to write a book called How to Not Hire a Consultant. You don't hire a consultant and put them in a position where they're going to fire the people that you bond with. So I stalled and came up with a 3-month plan when in reality, they could have just stopped the next day. Because these people had jobs. These people need to have an opportunity. They had very specified skills. So, I was serving hard back then. So I was trying to put them in a position where they would be able to, and I told them straight up, this is what's going on. This is what I've been asked to do. So you guys are going to be eliminated. You need to put yourself in a better position. So I came up with a 3-month phase in because of that. I thought this was about IRAs. It is. So now you've got this situation where you have defined contribution plans. Now, here's something that the government didn't think about. The government didn't think about the fact that, yes, having a defined contribution plan gives the individual the power to be able to have more money than they would with defined benefit. It also gives them more money than they would have with Social Security. But here's the mistake they made. They made it optional. They made it optional. So many people, just like the people I'm talking to right now, had access to defined contribution retirement plans that, by the way, are called 401ks. Why are they called 401ks? Because on Chapter 401, Article K of the IRS tax code, that's where they talk about 401ks and say that 401ks are the bomb taxically because you can take the money out pre-tax. What does that mean? That means you can put the money in before they take taxes out of your check. So you actually can have more in your take-home pay by contributing to your retirement plan. But guess what? Nobody knows that because didn't I already tell you that the people who tell you about personal financial products are also the people who sell you the products, and people who are financial advisors, they don't sell you retirement plans. Think about it. Why would I sell you a retirement plan when companies buy retirement plans, not individuals? So I said all of that. I told you that great story just to tell you this. By definition, the IRA is inferior to the defined benefit, the defined contribution plan, because it does not allow you to put as much in. And guess what? It's after tax. It's after tax. I just said 401ks are called 401ks because it's chapter 401, article K of the tax code. So that means there's something good about it tactically. But wait a minute, I work for a nonprofit and I got a 403B. Exactly. Chapter 403, article B. So it's named after the tax code because you get a tax benefit. An IRA doesn't give you a tax benefit, but guess what? It was sold to you. You didn't buy it. It was sold to you. You didn't buy it. So in reality, what happens is you're put in a position where with a defined contribution retirement plan, you could back then have put as much as $8,000 in a year and it was pre-tax. But an IRA, you could only put $2,000 in and it was after tax. Let me put some numbers on this. You know, the average tax rate in America is 28%. So if you're putting money in your defined contribution retirement plan at a 28% tax rate, that means for every dollar you put in, you're saving a dollar, you're saving 28 cents. Let me say it again because I stuttered. Every time you put a dollar in your defined contribution retirement plan, you're saving 28 cents. So in reality, you're putting in $1.28. But every time you put money in an IRA, it's after tax. It's your money, individual retirement account. So you have to pay 28 cents first. So that means you're really only putting 72 cents in an IRA. So the defined contribution, you're putting in $1.28, but the IRA, you're putting in 72. So if you look at it, it doesn't make sense. It doesn't make sense to do an IRA if you have access to a defined contribution plan. But people are not sold defined contribution plans, they're sold IRAs. So a lot of people have IRAs, but they don't utilize their 401ks. Now, I already told you this conversation wasn't relevant, but we're breaking down how you look at a historical perspective and put the financial product in perspective so you can make decisions. And we're going to make those same kind of decisions about the products that have not been invented yet. So let me share with you an analogy that I used to use to define the difference between defined contribution retirement plans and IRAs. So I used to be a part of a church that had 70,000 members. And the pastor was really big on teaching premarital counseling. So I used to be the personal finance premarital counselor. So he would do the premarital counseling, I would just do the finance part. How do you marry your ideals and your philosophies and put yourself in a position where you make good decisions from a marital perspective. Now, when I did that for 9 years, and a very interesting situation would happen. The interesting situation was this. Individual men would get that little itch and they would decide that they were thinking about cheating on their wives. So what they would do is they would not go to the pastor because number one, the pastor was older. Number two, they would wonder if the pastor would judge them. So they would come to me. I was younger, I was cooler, and I wasn't the pastor. So they would come to me and say, look, man, I'm having some issues, man. I'm thinking about cheating on my wife. So my thing was, I got to figure out a way to show these dudes that they need to stay in their marriages. They need to put themselves in a position where they're going to make the right decision. So I came up with this analogy. I said, let me think about this. You only want to cheat because you stopped putting 100% into your wife. So this is what I want you to do. For 30 days, go home, give her 100% of your time, 100% of your energy, 100% of your money. Give her that for 30 days, come back and holler at your boy. They will come back and every single time they would say, man, you were right. You were right. I just stopped giving 100%. We're good. We reconnected. We're good. Boom. Thank you, man. Appreciate it. That's the same thing that happens with 401ks versus IRAs. If you're not putting 100% into your 401k, why are you putting money into the IRA? The IRA is the cheap financial economic whore that's on the side. Did he really say that? He did. Can we keep it real tonight? So the 401k in that context, in defined contribution with pre-tax contribution, is your wife. Why? Because it gives you everything you want. It gives you pre-tax contributions. It gives you the ability to be able to put a large amount in. It gives you the ability to be able to do more. That's your wife. But the IRA is the whore on the side. It's the financial whore on the side. Of course, y'all know I'm just playing, but it's gonna make you remember this. So the financial whore on the side, why would you put money into her when she's 72 cents, when you got this $1.28 right here? What you doing, bruh? Put the money in the $1.28 instead of in the 72s. So this example, this analogy, it made people think about it and realize, you know what? He's right. Why am I putting money in this IRA? Because it was sold to you. That is why we're economically empowering ourselves. We're being our own bank so we can put ourselves in a position where we decide what we want instead of letting other people decide what we want. So now, here's my favorite part of this conversation. It's all irrelevant. If you're watching this recording, go back and erase it all because it doesn't matter. What matters is the fact that whether you invest in a defined contribution retirement plan or you invest in an IRA, guess how much you're making a year? Maybe 11%, maybe 11% a year. We're making 3% a trade. Get in the camera, finance doctor. We're making 3% a trade. Why do we care about 11% a year when we can make 3% a trade? So it was a good conversation. It was cute. It allowed me to be able to say whore on camera. But the bottom line is this. We have a vehicle that makes this legitimate conversation and that legitimate question irrelevant. Because yes, it's valuable to talk about the difference between a defined contribution retirement plan and an IRA. He had a really good time in Northern California. But the point is, we've got a vehicle that gives us strength, that gives us comfort, because we have the real retirement plan, which is 3% a trade instead of 11% a year. Questions, comments, testimonies on a talk with the finance doctor.
Dr. B, you are something else. It was Tuesday night, you said the H word, and now tonight, the W word. Thank you. Thank you for the wisdom and for your analogies and how you break this down and take us to a place. Here I am, 83 years old, and I've never known all this that you have just poured into us. And look, I mean, the virtue has gone out of you because you're pouring it out with your heart, from your heart to our hearts. And I thank you, sir. We cannot thank you enough. And I'm so glad that I can be the spokesperson for all these rectangles on this line. We appreciate you, and only heaven's glory is going to make you know how much we appreciate you. Thank you for everything.
I appreciate that, Ms. Brownlee. I really do. Questions, comments, testimonies. Questions, comments, testimonies.
Dr. Bytewood.
Yes.
Well said. Well said. I could not have said that better myself. You are truly getting us into a position where we are economically stable and free. And I just want to say, I thank God for you. You are anointed in a special way, and I appreciate who you are.
Thank you for that, Cash App. I really do appreciate that. Thank you so much for those thoughts. That really warms my heart. It really does. Questions, comments, testimonies.
Mr. Bytewood.
Yes.
Can you hear me, sir?
I can hear you fine.
Thank you very much for this great information, but I'm going to go back to about two meetings ago. I think it was last week. You spoke about the interest rate in selling the home. I was told that because the interest rate is going down, and if I want to refinance my home, if it goes all the way down and my home is not sold, then I'm
After you said, if my home is not sold, I lost you after that. If my home is not sold.
going in and out. If my home is not sold, not refinanced rather, if I don't refinance it and the market and the interest rate goes down, then it's going to really affect the equity that is in my home, because I have a very high equity in there. So if I refinance it now, then I can have that. I can take that money. I can not really taking the money. It will make it lower, but I will lose money because the market goes down. I hope I'm saying it right. I hope.
I want to address that. I really do. It's 10:36. Can you please promise me that you'll get a little bit more data so that you can, because we could certainly do a whole call on this. And when I tell you that it will benefit everyone, I promise you it will. This is the kind of stuff we need to talk about. It just needs to be at the beginning of the hour, not the end. So promise me that you will come here on Tuesday and we will have this conversation. Are we having our call on Tuesday? I'm going to assume that we are. So can I get that promise from you?
Yes, sir.
Now, what I want you to do is this. I want you to be
Yes.
aggressive about the details. So you just told me what they said, and I want that. I want to know what they said, because that helps us to break down the be your own bank component of it. But I also need you to be very specific about the details. This is what I'm having. This is what's going on now. This is what they want me to do. And this is what will happen when I do it. And I promise you this will bless a lot of people. Any other questions, comments, and testimonies?
Thank you, sir.
You're very welcome. Mr. Rogers.
Once again, Dr. Bythewood, you have taken the lid off of the roof. And I feel like the disciples trying to get their friend to Jesus, and they were so adamant about it that they were doing everything necessary and possible in their capability so that a true healing could take place. And I feel that you've distributed a prescription tonight that everyone should be rushing to ensure that anyone that's connected to the sound of their voice, that they're able to get this prescription tonight that you delivered. So I'm going to encourage everyone listening to take that mantra and go about it to ensure that this prescription is dispersed immediately to those who are in our sphere of influence.
I appreciate that, sir. I really do. So I appreciate your patience. I appreciate your attention. I appreciate you listening. I appreciate you laughing at my jokes. And so at this point, I want to just be grateful for a wonderful trading week that we had. And let me thank my business partners for being such an anointed crew of individuals. And let me thank all of you for allowing us a forum to walk in this anointing. And thank you for being part of this mission to financially educate and empower 1 million families. We can only do that through you. Thank you for allowing us the opportunity to speak truth, to walk in truth, and you guys are absolutely absorbing it, and it's the energy just bounces off the chat. Just love to listen to and watch our chat throughout the day, because you guys really are absorbing it, and we appreciate it. So let's seal this week with a prayer. Heavenly Father, we thank you so much for this dialogue. We thank you so much for this information. We thank you, God, that we can have a conversation, it be of value, and then we tell ourselves that it doesn't even matter. What a blessing it is for us to be able to have a vehicle that makes a dialogue like this relevant, God, because I remember when it was relevant, and now we have access to this, and we just thank you, God. We thank you, we thank you, we thank you. Heavenly Father, please bless everyone on this call. Please allow every single rectangle to walk in their anointing. We are thankful, we are appreciative, and we are grateful. And to all the BYOBers, amen. Enjoy your Thursday evening, enjoy your weekend, and we will see you Monday at 5 a.m.